the United States, and which began sometime in 2007 and was at its crisis level in 2009, affected the entire global economy. Its epicenter was the United States, and the effects of the recession spread to Europe through financial linkages, and then to Asia and Africa, and engulfed almost the entire world. The South Asian countries were no exception to this. They too had to face the adverse effects of the financial crisis. The South Asian countries faced the situation by adopting pragmatic counter-cyclical policies to ward off the ill effects of this recession. They were not so much interlinked with the subprime market in the United States. Their banking system was more or less independent, and they had some capital controls on their trade. So these were some of the factors that gave them some resilience. Moreover, the remittances that came gave them a stable inflow of currency, foreign currency. The foreign direct investment also was affected, but not to the extent as it was in other parts of the world. So this conjuncture of factors helped the South Asian countries to ward off the very adverse effect of the global financial crisis that during at least the first phase of its occurrence. However, the global recession, even though it may not be existing in its past form, the slowdown is nevertheless very much there. And this prolonged slowdown, both in the US and the Euro area, is having impact on the South Asian countries. None of the South Asian countries, nor even the broader Asian countries, can say that they are totally delinked from the northern countries. There is transmission through current account and trade accounts, and their balance of payments are affected as a consequence. In case of South Asian countries, the growth rate has come down after 2 years to a lower trajectory than what it was before the pre-crisis level. And this has to be faced with determination. Unfortunately, the fiscal space for meeting the challenge is much less now than it was earlier. They are having imbalances in domestic, both on trade account and fiscal account. There are problems of political uncertainty with elections looming in different countries, and the uncertainty of the fallout of domestic ambiguity of policies. There's problem that the reforms that they undertook may not be sustained. There may be inward-looking policies, and that may be harmful for the region. Liberalization must begin at the doorstep. It must begin in the region, because as a result of the crisis, the region can become more competitive in its exports. It should try to capture the markets because of this advantage. While imports are going to be more expensive because of the currency crisis, they should concentrate on trying to build up their import resilience by manufacturing domestically. This type of import substitution is not the one that was there earlier. It is a result of natural price emerging out of the depreciation of their currencies. This advantage should be captured. And further, there is enough evidence to show that this region has surplus in a number of products which the other partner countries are importing from the world. They are not able to sell to their partners because of logistics problems, because of connectivity problems, and because of high tariff and non-tariff barriers. These problems must be addressed so that the market for all the member countries are widened and they are able to adopt greater resilience from the adverse effects of the global recession.